Hello learners, this video is about factoring services, which is a phone-based financial service. It allows a firm to liquidate its book debts. Factoring involves sale of book debts by a firm to a financial intermediary, and this financial intermediary is called a factor. And services given by a factor are termed as factoring services. A factor facilitates the process of receivables collection to the firm, and a factor is also a source of financing for the firm. There are three parties which are involved in this: a firm, a customer, and a factor. When a firm concludes a credit sale with the customer, it simply means that funds will be blocked till the time customer pays back. So instead of waiting for the release of these blocked funds, firm sells these receivable account to a factor and notifies the customer about this transaction. Factor makes advance payment against this account after adjusting for commission and interest on the advance. Factor also maintains the customer's account, and follows up are done by the factor only for the payment. When customer pays all dues, factor makes final payment to the firm on a guaranteed payment date. For rendering the services of collection and maintenance of sales ledger, the factor charges commission expressed as a flat percentage of the value of debts purchased, and collects this commission upfront, that is, at the time of purchasing the debts. For making an immediate part payment against the debts purchased, the factor charges interest at a rate which is marginally higher than the rate of interest charged by banks on working capital advance. The interest charge is calculated for the period between the date of advance payment and the date of collection or the guaranteed payment date. If the interest charge is collected upfront, it is referred to as the discount charge. There are 5 functions performed by a factor. The very first function is collection. It is the most important function of a factor. There are 3 steps involved in this process of collection of debts. Factor sends reminders to the customer about the payment. Factor sends statement of account to customer before due date. If customer does not pay on or before due date, the factor initiates personal collection efforts, and if factor is not able to recover the amount from a customer by any means, factor take legal actions against customer. Second function of a factor is to maintain a sales ledger for each client. Third function is credit protection. When a factor purchases receivables under a non-recourse factoring arrangement, he defines the credit limit up to which the firm can sell to the customer. Now here we define what is a non-recourse factoring arrangement. A non-recourse factoring arrangement, factors bears the losses incurred due to default by the customer. There are 2 other functions of factor. Short-term lending and advisory services are provided by a factor to firms.